Alrighty, good morning, everyone, and happy Friday, March 14th. It is so good to have you all here doing things differently today. So it's going to be kind of a new showcase or way I'm going to be teaching things. If you've been to my previous showcases, you've seen that they've been those coaching events where I get to help you with your questions, and that's still going to apply. But keep in mind the market conditions that we're seeing now are a little bit more skeptical as far as where we're going. So as we start this decline on many of the equity indexes, we need to be prepared for the potential of having a bear market coming up. So can anyone tell me what is a bear market? What qualifies for that percentage drop to the downside? Does anyone know that? What's the technical percentage that we need to drop in order for it to be considered a bear market? Yeah, it's a 20% drop, so it's pretty significant. If we are approaching that 20% as we continue to move lower, we need to be aware of exactly what are those signs. So I'm going to give you some resources of what to look for. Learn the warning signs, know what trading strategies we should be looking at. So we want to have a very specific game plan of how to approach these markets, just like we do when we have a bull market and the markets are raging to the upside. We have a trade plan for those types of market conditions. We need to have a similar trade plan for when the markets are pulling back and be confident that when other people are freaking out that the markets are pulling back, we can be strategic and know exactly what to look for. So this is all going to be coming up on kind of the heels of my upcoming 3-day boot camp that I'm doing that's going to give you a lot of insight into how to trade these bear markets. So first time doing this, very excited for it, and based on a lot of your feedback as well. Many traders, struggle with looking for short trades. I found it's a common thing. So if you're one of those traders that struggles looking for short trades, kind of being uncomfortable with knowing what to trade, is it just a correction? Is it a longer running move to the downside? I'm going to be help you guys with that today and during that 3-day boot camp. So trading when the stocks are down, learn the warning signs. So not only from a chart perspective, which is, we're going to be bringing that in during the 3-day event of what are those price patterns and what do we need to see, but also what are some other external websites that we want to be looking at that can tell us when to look for these larger pullbacks. So spot a bear market before it hits. All right, let's get into it. So how to predict and trade market turndowns, turn fear into opportunity, exclusive trading strategies presented by KaitTrade's.com. So being able to see when the markets are pulling back, what are those trading strategies for short trades on those pullbacks, taking breakout trades, what products should we be looking at, but also what should we be buying as well. So at some point, we want to be looking for some long trades, right? Markets are dropping. We want to buy when prices are down, take it to the upside. I'm going to give you some insight into that as well. All right, great job, Scott and Dan. So what is a bear market? A bear market occurs when an asset declines 20% or more from recent highs. So keep that in mind, 20% or more. Some fun facts, since 1928, there have been over 25 bear markets, if you can believe that. Over 25. So some of the common ones, we've got the 2008 financial crisis. We've got the 2020 more recent COVID crash. And now, so potentially looking for that bear market if we do get to that 20%. So the question is, what if you could have predicted 2008 or even 2020? What are those signs that tell us to look for price to be pulling back? So I'm going to give you some four tips for what to look for. So spotting a bear market before it hits so that we're not surprised, we're not panicking when this happens, what to look for. So I'm just going to give you in this showcase 4 things that I like to look for that helps me gauge when the markets are going to be approaching bear market. So the yield curve inversion. So this is when we're looking at the 10-year and the 2-year yield spread If that starts to go negative, meaning it's inverted, that means a recession is likely coming. So every recession since 1955 was preceded by this. So for me, what I'm going to be doing throughout today's showcase as well as the event is I'm going to be giving you actual websites that you can go to, and we can see this ahead of time. So if I come over to my website here, and we take a look at this chart. So let me break it down for you. Actually, I'll go to the next slide. So here's a chart showing the yield curve over the past, let's see, 1980 to 2025, over the past 40 or so years. So on the previous slide, it simply told us that when it starts to go negative, basically if it hits this black line or below, then we start to see this larger pullback in the markets. So I wanted to focus in on some of the more current bear markets that we've seen and how it was anticipated ahead of time. So spotting it before it hits. Notice that yield curve went negative. So this darker black line, 0%. If it drops below it, that's going to be a negative yield curve. We've got over here, back in 2000, tech overvaluation. That's when we had that tech bubble. Notice this yield curve started going negative, and that's when ultimately that overvaluation hit and the markets dropped. So if we come over to this chart now and we start looking for price to be near or at this black line, we can anticipate a similar market condition to happen. We come over here. So now it's hitting the black line again, keeping it simple. If it touches it or goes below, if I put a year marker on this, this was back in 2008. You guys remember 2008, housing bubble, debt defaults, the markets had a pretty big drop from that. And that lasted a long time. More recently, we could come over to COVID. So it just barely tapped that line just prior to 2020. Let me come back to this slide. So when we're looking for that yield curve to be zero or lower, typically recessions or at least bear markets follow for the next year to year and a half, 12 to 18 months later. So keep that in mind. So more recently, 2020, COVID, we hit that black line, and then that's what started that major downturn in the markets. So where are we at now? So you can see it had been negative. We're right above that black line, starting to pull back. In the past, when we had been close to that black line, typically it would start that pullback in the markets. So if I'm taking a look at this, and I'll give you the websites in the follow-up email, and we're using this data to say, all right, this is what's happened in the past. What could we anticipate moving forward? As this starts to roll over again, we would anticipate a larger pullback in the markets. We're already seeing that now. I mean, we're having a bit of a rally today on S&P, but over the past, hasn't been looking good for the past month. We have been in this larger downturn. So that has signaled the potential for bear market territory. Markets are pulling back. We check our indicators, starting to get close to that negative yield curve again, indicating potentially a larger pullback. So if I'm anticipating, is there a bear market? And many of you guys, when I asked you, are anticipating yes. Here's resource number one. Number two, corporate earnings. So if the S&P 500 earnings decline, that signals trouble, right? So that makes sense. Earnings announcements, if we're not doing good, more specifically, if they decline for multiple quarters, the markets turn bearish. All right, so this chart here, this is a good one. Kind of a similar thing. I like to keep it simple. Use these peaks, or sorry, use where it hits the black line. So black is showing flat earnings growth. This is a chart of S&P 500 earnings growth rate. So if we're at this actually lighter line here where it says zero, if we're there approaching it or slightly below it, that's when we anticipate the bear market. So we can see as it started coming back down back in 2000, again, that's when we had that bear market, housing bubble. Back in 2008, started dropping, larger pullback. Same thing over here with COVID, we started seeing that decline. So where are we at now? How are we doing on earnings? It's not looking so great right now. We're at, what does it say, 8.69%. So not too great. And by the look of this chart, we just had a little pop up, but this recent drop of earnings growth, I'll come over to the website here to show you. Yeah, we're at 8.69%. But if this does have the next breakdown, again, these indicators are starting to line up. We're seeing the S&P start to roll over as far as earnings growth becoming worse. Typically, as it's approaching that line, it continues moving down. So looking for that next drop, correlating it with the other one that we had. What was that one? Back on the chart here, the negative yields. So we're approaching lower. So in order to see these ahead of time, we want to see just before as it's pulling back, is it getting close to that black line? And typically as it gets closer, we then get that drop. So it approaches, drop, approaches, drop, approaches, looking for that next drop. Same thing here, earnings growth. Number 3, credit spreads widening. So if we're looking at junk bonds versus treasuries, if that gap widens, then typically that's when institutions are demanding higher interest on the risky debt. Not a good thing for the markets. Typically it results in a bear market. So what we're going to be looking at here is the high yield spread. Basically, if we see this chart spike high yield, then that's going to indicate potentially the next bear market. So we can see back in 2000, I just circled the 3 that we're focusing in on for today's session. 2000, the numbers that as I've back tested this, 7.5 to 10% is typically that range where we see us getting closer to that larger market pullback. 2008, we can see we hit that 7.5% and then shot up from there. COVID, again, right at that between 7.5 and 10%. So if we look at where we're at now, not so bad as we come into the start of 2025. We are down here, but let me ask you guys, when price was pulling back prior to these big spikes, what was price hitting? So here's when the markets started, the bear markets at the circles. But if we look down and left to see what precipitated it, this pullback here started from when the percentage came down to 2.5%. So notice 2.5%, that started this huge spike and the housing bubble. Price came down, actually that was over here as well, 2.5, and then it spiked. Where are we at now? Raj hit the nail on the head on that one. Did we just hit that 2.5? So even though everything seems good now, and maybe if we're looking at this just based on the spikes, you'd say, no, we're not anywhere near close to those credit spreads widening. And you're right, I mean, we're down here, but the past times that we've touched 2.5 back in 1998, and then the more significant one with the housing bubble, 2008, just before that, kind of 2007, is when we tapped it. And you can see the result from there. So where we're at now, we just broke down from those prior lows back in 2022. These price charts act pretty similar to how we trade the 2-candle flip, believe it or not, wick over wick reversal, how we find zones. It's amazing how we'll find the similarities. And we're going to be doing that during the 3-day boot camp. is seeing how we can kind of put all these pieces together. So 2.5, that's kind of that bottoming out number that Raj mentioned. Might be anticipating the next spike. So we're not there yet, but it's something to keep an eye on. How are we feeling about the market so far? We feeling good? We think they're going up? Or are these three signals not looking so good? What do you guys think? Are we feeling bearish or are we feeling bullish on the markets? You guys tell me. So from the three we've seen before, would you say these three indicators are giving us a good feeling about the markets, or is the credit spreads, declining corporate earnings, and the yield curve giving us more precarious market conditions? You tell me. When you're trading, how are you feeling about the markets? Are you feeling good? Are we looking to stay in these trades long term, looking for the next bull market? Probably not. Yeah, and that's what I kind of want you to see, is that as I put out some of this new information, maybe some of you guys are just taking it in. But yeah, Diane says stars are lining up. It's starting to connect the dots. Now, these are just three that I've put together. I've got one more as a bonus for you guys. This real-time market sentiment index will give you fear and greed in the market. So it's a good way to, using data, understanding when the markets are potentially looking for more of a pullback, and we can anticipate that next bear market. So this real-time market sentiment index tracks investor sentiment, extreme fear. So if everyone's panicking, and we might not be there yet, as I asked that question, Scott said we were in long-term bull market. You would think go long. Yeah, so no one's really panicking right now. We're not feeling great, maybe. Let's see, Michael says, doing my best to adjust, don't want feelings, into it, go short or long. There you go. And that's what we're going to do, Michael. Great way to summarize it is it's not feelings, it shouldn't be, it should just be price charts. These indicators give us that indication of what to do. Are we looking to buy? Are we looking to sell? And like Michael's saying, take the emotions out of it. All right, so let's come over to our fear and greed index. I'm going to bring it up now. All right. So over on the right, extreme greed typically is when we're in a booming market, we're rallying, we're making higher highs, things are great, our accounts are doing good, everything's on the rise. Where we're at now is 16. 16, extreme fear. Not neutral, not fear, extreme fear. So this is going to be huge as far as what we're seeing. As I'm bringing up each of these charts and these indicators, everything's pointing towards potentially a larger pullback. So, Scott's saying, and I agree with you, longer term, if we're looking at it, over the next many, many years, you would think to go long. And that's where we want to look for those pullbacks. Where are we looking to buy? Where are those zones at that can give us those best entry points so we can stay in them longer term? But this bonus indicator on CNN's site, extreme fear, not looking so good. So we put all these together if we wanted to tell a story with these four indicators. And you can look at these websites on your own, but you don't have to. We've done it here. Yield curve starting to go negative, approaching that negative point. Declining corporate earnings, we're seeing some pretty low rates as we approach that baseline mark. Credit spreads widening. We just tapped that 2.5%, kind of bottoming out, as Raj mentioned. And our market sentiment is extreme fear. So putting everything together, we want to be prepared for a bear market. So what we don't want to do is think, no, the markets are fine. I'm going to look for my long trades and everything is going to be fine. These indicators are saying, hey, this is starting to look bearish. And we may anticipate a larger bear market on the rise. So you may not be feeling it yet. I just started seeing in the news today some more bearish news coming out. So we want to be prepared for that. Ultimately, we want to know how to trade it. So S&P here, blank chart, kind of going back to the basics, see the warning signs. So what triggered this pullback? Well, we'll go into this during the upcoming 3-day bear market boot camp, but there's several key price patterns that we can see on this move down. Can anyone say what started this pullback? What was a sign that a bear market was on the rise? So not only was it those four indicators, but what else was here that anticipated this pullback? If you've been in my previous classes, what do you see? Let's see, Scott's got a triple top, you bet. You can see price rallied over here. We hit it again, hit it again. We were struggling to break above that 61.66. So not even a double top, we've got a triple one. A lot of selling pressure coming in at that point, signaling prices are moving lower. We've got a 2-candle flip, you bet, green and red at the top of move. A lot of 2-candle flips over here. We've got one to the left, we've got one here, we've got one here. So you can see several indicators lining up. What I'll go into during the upcoming 3-day boot camp is not only give you the tools of the strategies and what we're looking for, but also the price patterns. What we talked about in the last coaching event was how a double-sided breakout can often lead to a larger pullback. What that means is if we break out to the upside just a little bit, and then we start breaking support to the downside, that's what can signal a larger market pullback. So this is just the start. If you're not into any short trades yet, we're still at an early point, and I would anticipate we might get that bounce up, but any sort of a bounce, it's not going to be looking good. There's a lot of selling pressure coming in. If we take this and compare it to what happened at the COVID crash, you're going to notice actually the same sort of price structure. So at the top of this move, notice we had all this resistance. We broke out to the upside, and then we broke down through all that support. Same thing that I just did on the S&P. Let me bring up our S&P chart here. Maybe I can put them side by side. So COVID crash, upside breakout. Once it took out that support, you can see we started that bear market, and the market's tanked from 3,400 down to 2,200. So where are we at now? We broke out to the upside, just like over here. Upside breakout, upside breakout. Once it took out that support, that was the first signal to anticipate a larger pullback. So this happened not that long ago, honestly. This happened just a couple days ago on the daily chart when we took out that support. So that was the first indication that from a chart perspective to start looking for short trades. So if we're not looking for short trades yet, again, this might just be the beginning of the bear market. So we need to start prepping that way and knowing how to trade these markets. So for the upcoming 3-day event, it's going to be my bear market boot camp. I'm just giving you a taste today of what to anticipate in the actual event and the bear market boot camp. But I'm going to be taking a lot of these indicators and giving them some real meaning by applying them to the live charts. We're going to be using some new strategies that I'm incorporating to help you visualize what exactly we should be trading. So the title here, Kate's top 4 bear market trading strategies, but this can also be Kate's top 4 long and short trades. What are we looking to buy and what are we looking to sell when we anticipate a bear market? So this event's coming up. I've got a bonus for everyone who signs up today. The event's going to be towards the end of this month, the last week, March 25th, 26th, and 27th from 2 p.m. to 4 p.m. Eastern. So we're on the heels of that. Again, getting to know where are we looking to buy and where are we looking to sell. So my top 4 long and short trades are going to be grouped into 1, shorting the weakest sectors. This is going to be technology. A lot of times this becomes overvalued. Financials is one that typically gets a larger pullback, and of course, discretionary. So what I'm going to be doing is bringing in some sort of some scanners into Thinkorswim. We'll bring in your suggestions and what you guys are looking at, and we'll take a look at which ones are having these larger pullbacks. Does it fit into one of these buckets, tech, financial, discretionary? Some of these can have some larger moves down. If I come over to, let's take a look at Tesla, for example. It's not looking so good. So the highs back in December got pretty close to 500. We hit 480, and now we're at 248. So you can see this down move, if we are going to be having the next official bear market, officially meaning down 20%, then we can see that Tesla not looking so good. We are in more of a pullback at this point, more of a bear market if we're looking at Tesla specific. So how do we trade this? Well, if we're looking at shorting the weakest sectors and tech being one of them, well, let's look at Tesla. Where would we look for our short trade opportunities? So we'll bring in some of the chart patterns that I've taught in previous classes. I'll go over some of my favorite ones for bear markets. That's going to be looking for those breakdowns. When we take out those support levels, we see price continue to break down. Support, breakdown. So how can we get into some of these moves at a good entry point? That's going to be on these pullbacks. So when price is rallying, typically that's the place where we would have wanted to go short, and then that's followed by a larger move down. So who can tell me, take a guess, these topping points, why did price stop here and why did price stop here? These were good trade opportunities because of what? What are we looking for when we're looking for short trades? When price is rallying, we want to go short when price returns to a what? Anyone want to take a guess? What are we looking for the best entry point when we want to go short in a bear market? We want to see price return to, yeah, marked in. Absolutely, you guys got it. Controlling breakout pivot. If you don't know what a controlling breakout pivot is, I will discuss it in more detail during the event. It's simply the last bit of basing or consolidation before a breakout. So price stopped here. If this is where we would have wanted to go short, well, we need to look left. That means to the left, we likely ran up into a, great job, Rusa, controlling breakout pivot. See these 2 candles that are basing? Price is dropping, stalling, stalling, breakdown. So in this event, we will be looking at stocks, we'll be looking at futures, we'll be looking at Forex, we'll be bringing in all of those details because it really matters in finding the best trade opportunities. So controlling breakout pivot, short trade opportunity. Why did price stop here? Well, if we look left, we have a controlling breakout pivot. How do I know it's a controlling breakout pivot? In simplest terms, it's the last bit of basing before a breakout. Last bit of basing before we break support. When price returns to it, we look for our short trade. Can we bring in any odds enhancers to help us with these short trades? Well, if price is returning to 1 and we've got a, I don't know, maybe a 2 candle flip, do we have a fake out breakout? Do we have a wick over wick reversal? I mean, this one here on Tesla, we've got a very good looking two candle flip, controlling breakout pivot, fake out breakout. Couldn't be more aligned than that if I tried. And this is just looking at a daily chart. All of this can be applied to the smaller time frames as well. What's something else that you guys are looking at as far as stocks are concerned? You guys give me one. Give me a tech, financial, discretionary. What's one that you guys are looking at? Could be anything. We'll take a look at it. Tech, financial, discretionary. What's pulling back now? Let's do it, Mike. You got it, NVIDIA. Let's see, NVDA. Let me clear this off. All right, NVIDIA is actually up for the day, so we're up 4%. Let's see, but how long is this rally going to last? This is where people often get kind of unsure about where price is going. So you simply want to look for, as Mark, Dan, and Rusa mentioned, where is that controlling breakout pivot? So price stopped here previously because this is where price rallied, it based before we had a breakdown. Then this becomes our area where we look for a short trade opportunity. Now on this move down, where did price stall before we had a breakdown? So I'll teach you some of the techniques of what to look for, but sometimes if we come up and left and we see a place where price had a strong move down, we have one here, we have over here. So there's two places I'm looking at. We want to look for where was that support level that got taken out. So I can see that there was some support in here. Price tried to rally, looks like on this day on NVIDIA, we gapped up, tried to rally, and then completely fell from there. So if I isolate, what do we call it when it's two red candles crossing and their wicks are crossing? Two red candles, two candles of the same color with their wicks crossing, meaning you have a bottom wick on the first candle, top wick on the second candle. Yeah, that's our wick over wick. Nice job. Demetrius, Stan, you bet. That's our wick over wick, and that's one of our odds enhancers to say look for a short trade. So price is rallying. We feel good now on NVIDIA. But as we start to rally, identify your opposing controlling breakout pivot. This one's going to be around, looks like 135 to 140. Combine that with your moving averages. I'll talk about this a little bit as well, but the blue line is going to be a 50 moving average. The red line is going to be a 200 moving average. Come over to the S&P. Just out of curiosity, how many of you guys use moving averages in your trading? Typically haven't in my classes up till now, but I want to bring some more of these odds enhancers in just so you can have them. You can use it. You don't have to. Up to you. Dwayne does. Demetrius does. Anyone else use moving averages or not so much? Maybe once in a while. So typically what they say, yeah, I like that, Patrick. Give perspective. Jerry says, yeah, exactly. So again, we're talking about bear markets. We're not there yet. So if we're looking for a 20% decline in order for us to technically be in a bear market, well, let's bring up our calculator. The highs were at around 61.50. So a 20% drop would be 61.50. 20% decline would be a 1,230 point drop on the S&P from those highs. So keeping that in mind, if I take 61.50 minus 1,230, bear market territory is going to put us at, let's see, right around 5,049.20. How far away are we from 49.20? All right, so we're maybe halfway there, right? So here was the top. Or if I even put a 50% on there, we might be halfway to the technical bear market. 50%. Wow. All right, so we are at a 10% drop then from the highs. Pretty significant on the S&P, right? So a 10% drop is pretty big. 20% bear market territory is just another halfway move down. You can see no signs of it really turning. We're getting these short rallies, but as far as what's on the other side, you're going to see a lot of controlling breakout pivots. They've been forming over the past several days, and we've been tracking these in the live trading room, that as price has been coming down and we take out these support levels, support breakdown, controlling breakout pivot, right there. Price return to it, sell off. Let's see the next one. We have support here. We've got another wick over wick on this one. Price broke down. Short trade opportunity on the pullback. Moving lower. Let's see where we're at now. All right, so we're hitting some support and we're rallying. Let me just make sure there's any other ones. Looks like that would be the last one. Maybe in here too, we had a lot of support. And it looks like this was the last bit of basing. You can see it got real choppy in here. Basing, drop. So if we start to rally, and we are up 1.3%, well, that feels good, but what are we running up into? So I know Michael said he went long yesterday at the close and he's still in it. So nice job, Michael. We're getting that push higher, but we got to be aware of where are we going? Price rallying. We got to be aware of where our opposing controlling breakout pivots are. So if I'm going to put a target on that, oh, I bet I'm sure I'm going to be looking at 5,800. Those round numbers can often be good tools as well to bring into your tools to use for your trading strategies. All right. So we are rallying. Opposing zone is going to be up a little bit higher. We're at 55.98. So not feeling too bearish right now. Things are good. We're happy, right? But keep in mind the title of the showcase that we're doing right now. It's Bear Market Boot Camp. These rallies get us happy for shorter term trades, but then ultimately the bear market continues. So a lot of bearishness, 10% drop is what we're seeing at this point. We just hit that 10%. And that's likely why price is rallying right now. All right, shorting the weakest sectors, trade inverse ETFs. Gave you a couple right here. So if we're bearish on the markets, if we're looking at inverse ETFs, would we want to go long on these or short? Who knows? If the markets are dropping and we're bearish, would we want to buy inverse ETFs or would we want to sell them? Yeah, there we go. Diane, Demetrius, Dwayne, you bet, Patrick, buy. Yeah, we're looking to go long. So I gave you a couple here that are more the common ones, but let's take a look at how they're doing right now. Markets are dropping from the past couple weeks. Let's take a look at SPXU, which will be a inverse ETF. Pretty big decline over the past several days, but let's zoom in to more currently. All right. So that makes sense, right? We've got the S&P. Let me do it this way. Here's our S&P. Pretty bearish. SPXU doing just the opposite. You bet. So great job, guys. Putting those pieces together. Markets are dropping. How can we trade that? Well, we can short it. If you want to look to go long something, well, you can go long the inverse of what the markets are doing. Look to buy as the inverse ETF is rallying. How can we trade this, or where can we find entry points? I know this is a common theme. I know many of you guys don't like to be on your computers too much. Some of us, kind of a mix in the room. I think we're a good mix of long-term swing traders and looking to find entry points on smaller time frames. But you would treat this the same way as you do your short setups. We want to look for two candle flips, wick over wick reversals, controlling breakout pivots. Can anyone, what number did we have a zone at? Where did we have a controlling breakout pivot or a two candle flip that we could have looked to go long at? 21, 22, 23, 24, 25, or 26? Which one do you see a place that would have been a good zone? See it? No. We're looking at this. Looking at 22. Let's see. So we've got a red candle coming down, green candle closing within the range of the red candle. That is our two candle flip. Nice job, Diane and Jerry. You got that one. So how I would mark that is I would say, all right, if we're in a bear market, the markets are going down. Well, let me look for long trades on the inverse ETF. 22, two candle flip. And it looks like we had two opportunities to go long already. Price dipped into it, dipped into it. So if you want to look to go long an ETF, anticipating the markets to an inverse ETF, anticipating the markets to pull back, here would be our zone. Can you see how it's the same sort of zone on the SPX? Green candle coming up, red candle coming down. Now if I mark that zone, two candle flip, just the opposite. So markets are going down, we find our two candle flip short. The inverse is going up, we find our two candle flips to go long. Let's see. So that's the second one. So top four long and short trade opportunities. We're buying the inverse ETFs. We're shorting the weakest sectors. We're riding these bear market rallies. So what does that mean? If we're in a bear market, what rallies are we buying? Short covering squeezes. So kind of like today, I'm sure a lot of people are bearish on the markets, which I am as well, but we are up 1.3%. So some of those people who are trying to short the markets are getting squeezed out. Typically happens with a short squeeze is that these rallies can be pretty significant to the upside if a lot of people are going short. So as the markets are dropping, when it starts to pick up some steam, it can rally pretty quickly. That's what our short squeeze opportunity is. So we look for those short covering squeezes, looking for long trades, but we don't want to pick bottoms. We want to bring in some odds enhancers. Should have a couple more details on that during this coaching event or this showcase. And then flight to safety. Has anyone been looking at gold lately? Gold, bonds, flight to safety. These are ones we want to look to buy. Gold, bonds, consumer staples, healthcare typically are good flight to safety ones, and we can look to buy them. If you haven't looked at gold in a minute, well, let's bring up a gold chart. But we are on the rise. So if gold, flight to safety, we're looking to buy gold, where would we buy? Controlling breakout pivots, two candle flips. We look for those pullbacks. We had one that formed a couple days ago on the 11th. Red and green, two candle flip, break out to the upside. The more knowledgeable you guys can become, the more confident you're going to be with your trades. So I'm bringing in all this information. It may seem like a lot at first, but it's to make you guys be the most knowledgeable, informed traders, investors, however you use this information. I mean, you don't have to know all of it, but the more informed you are, the more confident you are going to be in your trading. And during the upcoming 3-day boot camp, we're going to be putting all these pieces together. So when you approach the markets, you can have a whole new outlook of confidence, knowing what to trade, how you're trading it, taking the emotion out of it, not being fearful when you can turn on the news and probably see people panicking. You know how to trade it. So that's going to be the goal of the event. Couple strategies I'm just putting two here right now, but incorporating some of those odds enhancers. So how can we look for some techniques to help us with our entry points? So I already talked about the first one, which was the breakdown short. This is when we're shorting a stock after breaking support, and then you can bring in that 50-day moving average if you'd like. S&P, for example, will come back over here. Or let me bring up a new one. Let's bring up the NASDAQ. Blue line is the 50 moving average. We crossed that. So as we approach lower, now we look for our short trades, taking breakout short. Oh, here's a beautiful one here. NASDAQ, this one was back in February. Support, breakdown, price return to it, continuing to the downside. So we're looking for those short trades as price is moving down. Again, not bringing emotion into it, just reading the price charts as they are. Breaking below that 50 moving average and the 200, signaling a bear market condition. I may go over a couple minutes, so I do just want to post the link in the chat for the upcoming bear market 3-day boot camp. So if you are interested in signing up, I do have a special offer for everyone who signs up today. 50 moving average. The other one is a new one that I wanted to bring to light. So these are just two. I'm going to be going over some more advanced trading strategies during the upcoming boot camp. But number two is a good one, the bear market rally play. So everything's going down. When do we want to look for a rally? Well, we want to look to buy right after panic selling. Everyone's panicking, it moves down, and then we see a spike to the upside. So two indicators here is if we bring in RSI, Relative Strength Index, if that becomes oversold, meaning below 30, and VIX starts to spike, you can tell me what the VIX is. VIX stands for, do we know what the VIX is? I don't talk about it too much. There we go. Fear, volatility, fear and greed, you bet. Great job, guys. Yeah. So when the VIX is spiking, typically that's when there's the most fear in the markets. There's the most volatility. There's a lot going on. So these spikes, yeah. So VIX is rallying. People are fearful. People are panic selling. Everything's a mess. Again, we want to take emotion out of it. So let's look at what's going on in the markets today. So markets are rallying. How could we have anticipated this? What I'm going to do is I'm going to bring up a flexible grid during the actual 3-day event. I'll give you a lot of these templates as well as some tools that I'm using as studies to identify the 2-candle flip. So it'll put an arrow on the 2-candle flip zones. So I'm working on that. I'm going to be bringing a lot into the upcoming event. But okay, so we're rallying on, let me come over to the S&P and I will bring up the VIX as well. Do you guys look at the VIX or know how to use it? All right, I'm here to shed some light today then. Ah, okay. Watch it, maybe not know how to trade it. Well, here's the exciting thing. You can use it pretty similarly to what we talk about in um, my trading classes and in previous coaching events. Do you know if you find the price patterns on the VIX, it can give a pretty similar reaction to if we find these price patterns on anything else. Let me explain. S&P, big rally, we're up 1.2%. VIX spiked up here at, looks like 28 to 30. What do we have at the top of the VIX back from 3 days ago? What price pattern do we have on the VIX? Tall wicks, but yeah, more specifically, not just tall wicks. That's our two candle flip. So I take that and I put lines around it. Nice job, Rusa. Starting to see it? I have a two candle flip. Great job, Rusa. Proud of you. And bring in everything else that I've talked in previous events. If we find that two candle flip at a fake out breakout, what's a fake out breakout? Well, that's when price breaks out one way. Nice job, Greg. We break resistance, we move higher, and then we come back down. We break down. Typically that says, hey, we're looking to move lower for the time being. All right, so what does this mean for the S&P? Well, this is a topping pattern. This says two candle flip, fake out breakout, as Rusa and Greg are mentioning. That means volatility is dropping. Look for the markets to rally. What was the setup that we had? Price over here broke support. Can anyone tell me what the name of the setup is over here? You can see it looks like we're starting to form a two candle flip. Red and green. What was the setup on the S&P to go long? It's not going to be two candle flip because it's still green, or it's still moving. Nice job, Dwayne. Broke support. The best entry point, you've been in my previous classes, I typically say the best entry point is when we're getting a fake out breakout. Price breaking back up. Now you are becoming a super knowledgeable trader, investor. You're becoming smarter because you're correlating the volatility index, reading price patterns, understanding what they mean, and correlating it to the markets. I have so much to go over with you guys. So as we start to end our showcase, I just wanted to give you a lot of these highlights of what to anticipate in the upcoming 3-day boot camp. It is going to be a very interactive 3-day boot camp. So if you haven't attended any of the previous ones, this is going to be the most important one to attend thus far because it's going to be really focused in on the current market conditions. So the upcoming boot camp is going to be the end of the month, March 25th, 26th, and 27th, from 2 p.m. to 4 p.m. Eastern. $249 for everyone. I wanted to keep it that low rate for everyone so that everyone can join and take advantage of really what's going on in these markets today. So we need to understand not only what's going on, but also how to trade it and what we should be trading, right? So we're not going to be trading everything the same. We're not going to trade gold like how we trade the S&P or the inverse ETFs or foreign currency. Everything's going to be different. So you got a little bit of a glimpse into what to anticipate during the upcoming event. It's still going to be interactive and coaching based. So you'll have the ability to draw on the screen. You'll have the ability to talk on your microphone. You'll be able to use all of those tools. So learn to trade bear markets like a pro, meaning look for short trades, but also look for long trades as well, and learning how to time the markets accordingly. Ultimately, just being the most confident trader that you can be. So when I talk to students, I think there's a lack of confidence that many of us still have in our trades. And that simply means there's questions that we need to get answered. If you have these questions, it's just about bringing those questions to this boot camp, and then I can give you a way to look at things so that it helps clarify what the price charts mean and how to trade them. I'm going to get to the bonus because I know a lot of people need to jump. Good having you here, Andrew. Awesome, Michael. Um, this was a huge perk for everyone in the previous boot camp, and I know many of you couldn't join, but I am extending the one-on-one coaching when you register for the boot camp today. So when you register, I will send you an email to get signed up for a complimentary 1 hour coaching session with me. My goal is that as we prep for this bear market, and you've seen from those indicators what's going on, we need that time to talk to see, let me see what your trading is. What are you currently looking at? Is it stocks? Are you looking for long-term investments? Are you looking for scalp trades? I need to see where you're at to build this boot camp specifically so that I know what we're looking for to help you the most. So the last event, it was just a 30-minute one-on-one coaching, and that went by pretty quickly with each of you guys. So now I am extending it for 1 hour when you sign up today. When you register, I will start scheduling those coaching sessions out next week. So look forward to doing that with you guys. Learn to trade bear markets like a pro. The dates 25, 26, 27, 2 p.m. to 4 p.m. Eastern. It's going to be 249, and that does include the 1 hour coaching session with me to get prepped for this bear market boot camp. What does this include? The 3-day event, so live interactive sessions. As I mentioned, you're going to have the ability to draw on the screen. You can share your trade setups and charts. This is going to be a new one. I'm going to be bringing in some scanners and alerts to help with identifying some of these best entry points and when the markets are turning. So a lot of new stuff that I haven't done up till now, but keep an eye out for custom scanners, alerts. We're keeping it interactive, so bring your charts and questions, and then you'll be getting a bear market strategy and trading plan to take with you. Comprehensive event, it does include all of the recordings and content from the event, from all 3 days of the event. All right, that's pretty much all I've got. So trading when stocks are down, it's just about building our confidence, knowing what to trade, how to trade it, and bringing in some of those supportive tools so we can be confident with the trades we're taking. If you have any questions, feel free to send me an email. I'm very excited to have you all join the upcoming bear market bootcamp. And I am calling it a bootcamp because this is going to be more application based. With these markets pulling back, I'm getting us into the weeds of things and learning where these trade setups are on not only stocks, but futures, high time frames, low time frames. It's going to be, I'd say, a more fast-paced environment, but it's going to give you that real time knowledge of what's going on when the markets are dropping and how to trade it. Look for long trades on the pullbacks and look to short some of these larger down moves. All right. Thank you everyone for the participation. Great having you guys here. If you have any questions, feel free to send me an email and let me know what you guys are looking at with these markets pulling back. Be specific. What stocks are you looking at? ETFs, send me an email and I'll be happy to incorporate those as examples as we see what's going to happen over the upcoming weeks. Thank you all for being here. Thanks, Scott. Thanks, Deb, Dwayne. As always, have a great day, everyone. Have an amazing weekend. Bye, guys.